Hello, everybody, and happy Monday. Well, remember what happened last week where we were bragging about how gold had shot up and look what it's doing, and the wind is at our back. And then this week, whoom, down we go. All right, so what happened, and did anything fundamentally really change? Let's just dissect again kind of the plumbing of Wall Street here. Was there some expected profit taking? Sure, I get that. That's normal. Gold had run up really fast, really hard. People take profits. That's part of it. Next part is end of month. What you got to realize is a lot of traders have to hit monthly numbers. And if you're a big trader on Wall Street and you've been betting that gold would go down, you have something called a short position. As gold ran up, those short positions were getting crushed. Do these short traders have the ability in the short term to flood the market with paper gold contracts, kind of giving the impression of supply, more supply than is really out there as to being out there? Yes. Do the regulators allow it? Yes. Does it drive Walt and me crazy? Yes. But we're actually kind of used to this end of month thing. And a lot of you have been in this for a while. You've seen it. I think that happened as well. But something else I think is going on here. Do you remember a few weeks back, we talked about the Magnificent Seven stocks? They were driving the stock market up. And we said, wait, a lot of this was artificial, driven by a lot of election year shenanigans that pushed those seven higher, that helped push the overall market higher. Well, what are we seeing now? Here are the Magnificent Seven over the last 2 weeks. So Microsoft's down 5%. Meta, Facebook is down 10. Apple's only down 3. Tesla's down 20. Nvidia, that's your quantum computing share stuff, the super chips AI down 12. Amazon down 8. Google down 9. Well, wait, the overall market is only down about 3.5%, 4%. Meta's down triple that. Tesla's down a lot more than that. Nvidia's down quadruple that. Amazon, Google down what, 2.5, 3 times that. The Magnificent Seven are rolling over. Remember, 75% of the gains of the stock market last year came from those 7 stocks. Now they're going the other way. That means margin calls. Margin calls, people who borrowed money to buy stocks, they now have to come up with cash. That means they have to sell things they might not normally sell, including gold, silver, the commodity stuff we're in. Did that also contribute this week to the sell-off in gold? Yes. Now I'm going to add one more. This is speculative, but for my crypto fans out there, you see what happened to Bitcoin this week? See what happened to the whole crypto space? Who was the big seller of Bitcoin this week? BlackRock. BlackRock dumped almost $500 million worth of crypto just like that and in front of everybody. And the message was, oh no, BlackRock, the biggest hedge fund in the world, is bailing on crypto. I've got to get out too. They pushed the price of crypto down. What does that have to do with gold? What we're thinking here is that BlackRock wants to buy gold. If you are the largest hedge fund in the world and you have the ability to push the price of gold down so that you can buy it cheaper, would you do it? Again, just speculating. But my guess is when we see BlackRock's holdings, probably next quarter, you will see that the gold will have been a larger part of their purchases in the previous quarter. And I'm going to guess that that was probably part of this week's sell-off as well. So is any of this fundamental? No. Are we still in the second phase of this bull market where it's 2 steps forward, 1 step back, 2 forward, 1 back? Yes. So be right, sit tight. You're still in the right stuff. But I think that's what happened this week. With that, I'll turn it over to Walt.